Robin said, this session is more about corporate strategy. I would like to invite 3 people to the stage. I would like to invite Paul Neil, Standard Bank, to the stage. Mr. Tang Zhijun, SinoChem, CFO Hong Kong, to the stage, and also Graham Davis, Managing Director of Economist Group in Japan and China. I'm going to moderate this session in both Chinese and English. I'm going to do the introduction in English. Then I'm going to be speaking in, please, speaking in both Chinese and English. I just want to share our thought in terms of the session. Standard Bank is quite an interesting player in China. Some of you may not know, in South Africa history, the largest investment, foreign direct investment, $6 billion US, was committed by China's largest bank, world's largest bank, ICBC. So into Standard Bank, this is a very strong relationship. This is strategic relationship between ICBC and the Standard Bank allows Standard Bank to be, I would say, ICBC's linchpin to many interesting places. Paul is going to talk about some of very interesting work ICBC has been doing, for example, in Argentina, South Africa. Graham, I think one of the points alluded by Robin was no matter what's going to happen, there will be suspicion and fear associated with Chinese investment. It's difficult to sometimes to explain whether certain Chinese companies' investment being supported by government, so on and so forth. I think Graham is going to address this perception issue. Graham, also being a long-term student of Japanese economy, certainly Graham can relate Japan's yesterday with China's today. SinoChem is one of the major Chinese chemical company. During at the height of global financial crisis, if I were not mistaken, SinoChem almost bought DuPont in the United States. Of course, part of the SinoChem is a fertilizer business. That business has a majority shareholder of Potash, which is the largest fertilizer company in the world in Canada. SinoChem is doing a lot of things. Of course, upstream assets is always very important consideration. Mr. Tang Zhijun, as a CFO for SinoChem in Hong Kong, is quite well known in financial service, and he's largely responsible for fundraising and capital market activity. So I think logically, we want to tie this debate discussion with some recent development. I think, Paul, you are going to kick off. Then we are going to talk about this perception issue and what can be done. I think that's a plan. Then followed by Mr. Tang Zhijun from SinoChem. Paul. Yeah. Is working? No. 对不起，您上台告诉一下这怎么做。
Is that good? Okay, the good old roaming mic is always a much more welcome thing for us South Africans. Sitao, thank you very much for the opportunity to talk here. I just want to briefly just open up by saying that Standard Bank sits in a very interesting position in that we are a target of China outbound investment. With ICBC's acquisition of 20% of our group, which was Africa's biggest FDI at the time, I think it still is, it put us into a very unique opportunity, perfectly timed pre-financial crisis, to experience being a target. But at the same time, we entered into a formal cooperation with ICBC to make sure that what we are a part of is what we can expand globally. So our relationship with ICBC at the moment is beyond just an equity investment. They're not only our biggest shareholder. We are in a non-exclusive arrangement, working partnership with them, where we're really trying to have a look at this China outbound deal-making process and transaction process as a reality. The simple word of that is this reality. Even in today's financial crisis, we all can clearly see that how China wants to globalize itself and become a player is something that will happen. And I think the people who want to be skeptical about it are doing so at their own peril. It's simply a reality, so quite that way. We see that where success happens starts off with the political engagement between China and corresponding geographies. If you don't mind, because of our knowledge, I'm going to talk about Africa and South America emerging markets, so not really US and European focus, but where we see African governments or South American governments having a clear political engagement with China, we see success down in the investment in the commercial and the trade flows further down the line. And the reason for this is that a mature government who has a constructive conversation with the Chinese government around their agenda about the things that are important to themselves and to the population of a country, the economies that it's searching for, the economics that it's desiring, and the process that runs beyond just investment is critically important. For example, if you want to operate in Africa, the Chinese investors have to understand a thing called indigenization, which is about creating wealth for the locals. That can be through shareholding in companies, so when you're doing an acquisition, it goes beyond just a pure equity investment. You have to have local shareholders. And it's something that the Chinese don't understand fundamentally, but in order to be successful, it's something it's a pure reality. Employment is such a big issue in Africa. And what we're finding is that those who are successful in outbound investment into Africa and South America are doing something about employment for the local population as well. Economic growth, fundamental. This isn't about China coming and making some money for themselves and leaving. This is about sustainability for the targets, sustainability for the countries where the investments and the trade taking place. And another big thing, particularly around Africa and South America, is this beneficiation, which is creating value up the value chain. A lot of governments haven't really put into policy about how that works, but that's about extracting, for example, resources from the ground, doing the value chain processing in a country before exporting to China. And those are the type of highlighted agenda items that governments need to really be clear about when engaging China for the outbound investment. We're seeing at the moment some of the experiences that we've got, and I'm allowed to talk about these, so that's fine. We are mandated to advise China Guangdong Nuclear Power Corporation on South Africa's nuclear power strategy. South African government has come out recently saying that they are willing to build one, maybe two nuclear power plants. And China is in competition with Korea, France, and the United States. Our role as a South African bank, effectively in this case, is advising the Chinese potential investor in the industry of nuclear power around what goes on beyond just the building of a power plant and plugging into the grid. There's a huge demand from the South African government about building an industry around the power plants. That's about the supply of raw materials, it's the supply of transportation, logistics, and all those. It also is about development of skills. So you don't want the Chinese only coming in, building a nuclear plant, operating a nuclear plant. It's about building up the South African expertise in that particular area as well. So the advice that we give to China and Guangdong in these particular environments is beyond just pure investment, the pricing and the opportunity from a financial reward, financial discipline going down the line. It's about meeting the requirements of the South African government and the reality of operating in that particular country. Just quickly, the challenges that we're seeing at the moment experiences the issue of dollar liquidity. Even in times of big investment, we've seen quite a significant drive of dollar liquidity for international investment, and as a result, I think some of the deals that could have been happening in the past are not really happening from a Chinese investment perspective. But the exciting part for us as organizations operating in China and helping China go out is that we're seeing significant regulatory changes coming from the governments which are supporting alternatives to this. And one of the things that we look at as a financial institution is the RMB settlement and the RMB reserve currency things. We believe that China will adapt, will do things differently to what has been done in the past in order to make sure that this investment and trade does happen. Our economists for our group expect the China-Africa trade to be at a value of $300 billion US, China-Africa, as an example, by 2015, up from $100 billion. We're also speculating that $100 billion, that one-third of it will be settled directly in RMB in the future. And this is something that wasn't happening a year ago. So these are the realities that if you want to be able to engage with China, you have to look at going forward. A very important factor, and we just, ICBC is our significant shareholder, but we've just sold 80% of our Argentina operations to them. They are now 80% shareholder of our bank that we had in Argentina, which is the number 3 bank in Argentina. The investment was $600 million to purchase that. And we're currently in the process of going through regulatory approval to make sure that that final deal happens. But what's interesting from an ICBC perspective is that they are going to be the majority shareholder by far. We are the other 20%. How they operate an Argentina bank from a Chinese majority shareholding perspective is where the real conversation is happening at the moment. And that is about making sure that you have Argentina skills on the ground, relating to the Argentina bank, catering for the Argentina demands, the Argentina economy. It's not really China. So I think there's a fundamental learning curve and a fundamental desire to understand how different markets operate and work so that this outbound investment can really be truly global. And it's quite a very interesting personality, putting Chinese personalities with Latin personalities. It's always a fascinating conversation. I can just sit back and smile when we have those sort of deals.